good, YouTube? Y'all already know what it is. It's your boy, Charles Enoch, and we back with another Invest in Myself episode. So start the intro. So today we'll be talking about how to pay off your car using a credit card. But first, y'all already know your boy has to go through the YouTube thing. So I'm close to 1,000 subscribers and close to that 4,000 hours that I need to get monetized. So I'm gonna ask y'all to help a brother out. So that means go ahead, smash the like button. And if you're new to the channel, or if you have not done so yet, take a little time, hit that subscribe button for a brother. I really do appreciate it. Also, leave a comment as well if the Velocity Banking videos are helpful. One other important thing, shout out to my moms and all the beautiful mothers out there. I'm wishing all y'all happy Mother's Day weekend. All right, so with using a credit card to pay off your car, we're gonna be taking advantage of the 0% interest period that a lot of credit cards offer. This can either be from the introductory period when you first apply and get accepted from the card, or it could be from the convenience checks that you get in the mail that have those special offers of 0% for 12 to 18 months. And sometimes you don't even have to wait for the credit card companies to send out those convenience checks. You can definitely give them a call up, see if they have any special offers in regards to balance transfers that have that 0% interest for a number of months. And once you find that 0% special offer that's usually between 12 to 18 months, then we're ready to start that Velocity Banking to pay down your car faster. So I'll be using the amortized payoff calculator. And note, this calculator will be on my Patreon page, so go ahead and check that out if you haven't got a chance to. And with this calculator, we'll see how much we can save and how fast we can get the car paid off by using the Velocity Banking method with our credit card. So enough talk. Let's take a look at the example, man. All right, so let's take a look at the example that we have for paying off our vehicle. So we're gonna have a loan amount, let's say 30,000 for the car. We're gonna say the interest rate is 5% just to keep it simple. The loan period, it's a 5-year car loan. Number of payments per year is gonna be 12. So we see that it's gonna take 60 payments pretty much to get this all paid off. Now we're going to say that we got a credit card and we got $10,000 approved on the credit card, and we got the 0% interest on the credit card, and we can do the balance transfer. So what we're going to do, either if you have a convenience check, you can write it to yourself to get the money, or usually the bank, if you give them the address to where you want to send the money to, they will send a check to that the car institution for, let's say, $10,000. So we're going to say that we did that for the first payment. So if we see the interest right now, we're going to be paying $4,000 if we just paid the regular car payment. So let's put that $10,000 for the credit card that we got approved. Boom, we see that the interest now is only $17.28. So that will be a total savings right now of about $2,200, $2,300. If we actually see here too, so the scheduled number of payments was 60, it went down to 39. So that's a third of the payments already gone just by using our credit card, the $10,000 onto our credit card. Now we're going to say this individual that had an 18-month 0% interest. So they're going to use all 18 months. So let's say their cash flow, I think it's like $555.55. Let's say that pretty much they're going to be using their cash flow to pay that off, and it's going to take them 18 months just to make it simple. So we're going to go down to, there we go, 18. We're going to put another $10,000. Let's say that they got another balance transfer, convenience check, or they just apply for another credit card that had the 0% interest. So we're going to put that there. Boom. So we see when we put that there, they pretty much only have one more payment left, and the balance of that payment is not even the full payment. So if we see the numbers, the total interest that we paid was $1,278. If we go back, what was it, 1728? So what's that? Another close to $400 that we saved on interest. The other key thing that we see, remember the scheduled number of payments was 60. The actual number of payments we made was 20 payments. So we got this car paid off in a third of the time. Now, we do have to remember that we still have this $10,000 balance, but since we paid this off, the scheduled payment is close to $600. You would add that to your cash flow, which is already $555. So you're paying close to $1,100 to pay this card off. So if we add that up, maybe 8 more months. So we're looking at 28 months in regards to paying everything off. That's still pretty much half the time. So this is just an example of how you can use Velocity Banking and pretty much using those balance transfers, the money that the credit card company is giving to you pretty much for free for 12 to 18 months, and pretty much using that to make those chunk payments, and then your cash flow, you're going to pay that back onto the card. Now, one thing to note, when you're using these balance transfers, you don't want to use the actual card to pay for anything. All you're doing is using the balance transfer, whatever's on the card, putting that to your car loan, and then the extra cash that you got, your cash flow, you put it straight onto the card and you don't use the card. Because if you do use the card, they will start charging you interest. So never just use the card to pay for things. You're just using the card just to take their money as a balance transfer and chunking it onto your car loan. And this is what makes pretty much the car loan, the interest go down, because you're making those chunk payments. Because the amortizations at the beginning, you see how the interest, even if we look right here, you pay more interest on your first payment than you do your last payment. So if we're chunking at the beginning of the loan, we're going to save a lot more interest. So I really hope this was helpful. If it was, definitely leave a comment down below so I can make more videos like this. Again, happy Mother's Day to all the mothers. Shout out to my mom. You guys do amazing work. And please don't forget to like the video. If you haven't done so yet, definitely hit that subscribe button. Definitely help a brother out. And again, everybody have a good weekend and happy Mother's Day. You guys, peace out.